Okay, peeps, welcome back. So today we're going to be talking about which YieldMax ETF is the best. This would be the price version. Let's get it. So I actually need to pull up the charts of the YieldMax ETFs because I do not have them currently. Just got done trading futures, so that's why you guys are seeing the futures contracts on the screen here. So let's go ahead and go through these and take a look at the different prices. So we'll scroll over to the weekly here. As you guys can see, we do still have these support and resistance zones here. It's been a while since we looked at these because we basically stopped buying Tesla once we got to about 600 shares. So we're not currently buying any as of right now. But as you guys can see, Tesla is definitely not making our list here because they have been beat down pretty substantially. If we take a look at the price, pretty much, well, the actual peak was way up here, but we'll take a look at the resistance zone since I think that's probably the most relevant. We're down about 37% on that, so that's not good. But again, if we take a look at Tesla, you can see that Tesla is just now starting to recover from the $200 levels. So yeah, we would need to see Tesla go up for a while before Tesla is actually going to recover in price. So there's that. We're going to go through all these, by the way. So Coney, we'll take a look at Coney. As you guys can see, Coney has really been just ripping hard to the upside. I can tell you guys right now, the reason being is because the crypto markets are pretty much anticipating all 12 spot Bitcoin ETFs to be approved within the next week or at the latest by like January or March of next year. And so this is kind of a buy the rumor, sell the news event. I do suspect that's kind of what this is going to be. Now, do understand that if the spot Bitcoin ETFs come out, the price of Bitcoin and Coney could really rip way more aggressively than anything we've seen in previous cycles. But the usual bull market that takes place doesn't take place until after the halvings. So we could see something like basically a massive rally as a result of the news of the spot Bitcoin ETFs coming out. Like, let's say they are going to come out in January, hypothetically. We could see the markets rally until January, then the news comes out, and then they sell off, and then we rip after the halving after that. Something like that could happen. So this is Coney. I mean, it's looking pretty good, to be honest. You know, you started out at roughly about, well, I guess we started here at 20. They all start at 20, right? And we went down to 18, and now we're ripping to highs. We're up here at 23 bucks. So price of this is looking pretty good from the low to the high. You get a price increase of about 26 bucks. So is it fair to say that all YieldMax ETFs are just going to go down over time? Honestly, I don't think so. Part of the reason I say that is because not all the YieldMax ETFs are moving the same. They're all moving differently because they're all based on different companies. As you guys can see on the price here at the bottom, dating all the way back to August, the price has basically moved up over the last 3 months, whereas Tesla's price has moved down. So again, it depends on the underlying. We can take a look at Apple here. You guys can see that Apple did kind of break our support zone, so to speak. And I mean, we kind of have, I guess you could say we kind of sort of have like a resistance zone here, but it's not like really super defined. We usually want to see like many touches. So you got like 3 here, 4 here, or 5, I guess you would say. And then we got, after the 4th one, a breakdown to the downside. So basically from the top of this thing, we'll take this candle down to here. We're down about 15%. So this one's not doing so good. For those of you guys that are invested in AAPL, as you can see, it's down from the highs. We're at 188 bucks here. And the highs were at just shy of 200. So we'd want to see recovery in that before the price actually goes back up for Apple. And we'll go over here to ORC. You guys can see that ORC has really just getting pounded here. It's not looking so good, but if we do the measurement on ORC, basically from the resistance level down here to where the bottom is, you guys can see that this is actually underperforming Tesla. Tesla is down, but not as much as ORC. So that's not really good, but we are in this falling channel. This is typically a bullish pattern. What we would see is the price basically move up, up, up into the resistance zone here. And as soon as it breaks out, this is kind of how you would measure the move, basically from the bottom to the top for wherever the breakout point is. And you could basically see like it pretty much goes back up to resistance there. So we'll take a look at ARKK, I believe. Yeah, ARKK. I always want to say this is AARK. I don't know why. Kind of getting it confused with Apple. But if we took a look at ARKK, you can see this massive downtrend resistance line. If it breaks out from this resistance to the upside, the move is going to be absolutely massive. Let me tell you that right now. If we get a breakout to the upside and there is confirmation that it's going to move up, the move is going to be monstrous. I don't know how much it's going to move up, but at a minimum, we're going to see it go up to probably somewhere between 50 to 60 bucks, maybe even as high as around 100 at some point in the future. It's absolutely possible at this point. And we have been retesting the support and breaking above it. If it were to break and close below the support, I would say that's definitely concerning, but we have not seen that. It's been respecting the support and moving up. So unfortunately, OARC is definitely not going to make our list today. Keep going down. We got AMZ here. You guys can see that AMZ has actually respected the support level here. Although we kind of had like a fake out to the downside here, you can see we got some crazy wicks and stuff going on there. So from the top of the resistance down to where the candle closed, well, it's not actually closed yet, but it will be, to where the green candle currently sits, we're down about 6%. I gotta find Amazon here. So we see Amazon. So you guys can see that Amazon is currently in a bull trend. You can see these higher lows, higher highs going on, but we are also off of the highs. The highs sit up here at roughly about $190. So we would need the price of Amazon to go up in order for AMZ to go up, basically pretty much hitting that 190 mark and then even going into price discovery mode. So now we got FB. Surprisingly, FB is actually outperforming AMZ right now, which is pretty impressive. We're actually going to do the box for this. The box is easier, or the zones, as I like to call them, support and resistance zones. So you got your support zone down there at the bottom, and you have your resistance zone right here. So from the bottom to the top, this thing is up a lot. It's up 16%, but it's still not up as much as Coney. So see if we can find Meta here. Okay, no, there it is, Meta. Okay. So we're taking a look at the price of Meta. It has moved up substantially since it found its low down here at 85 bucks. We are sitting close to all-time highs. So basically, based on this, you could say that if any of the YieldMax funds were to go to all-time highs, we would want to see the underlying at all-time highs. That would be fair to say, based on this chart. So that's what FB currently looks like. And then we get GUI. GUI has pretty substantially underperformed, as you guys can see from the resistance down to where it currently sits. Yeah, sorry about that. That was actually a resistance zone that I just threw in. Wrong tool. So you get about 8.5% down. The price is still not as low as Tesla or OARC. So we'll take a look now at the price of Google. Go over here to Google. Zoom out. You guys can see that Google is up a lot, but I suppose the price of GUI is lagging behind a little bit, but we did kind of see this brutal sell-off here. As you can see, it went down roughly about, I'd say 15%. I think the main reason why that happened on that particular week was because of earnings. So yeah, they had a beat on the earnings, but if I had to guess, I would say it was probably the earnings call, the forward guidance, that caused the stock to dump. And as a result, that's probably the reason why GUI sits where it is. So we'll keep going down the list here. MSFO, as you guys can see, MSFO has been a great performer. This thing pretty much is just, well, we can't even really call this a resistance zone at this point. So basically pretty much have two support zones. You have one down here between 19 and 20 and one between like 21 and 21.20, something like that. So from the low to the high here on MSFT, you guys can see we're up pretty substantially, 13%. This will be the last one that we look at on the underline, because if I go through each of the underline with you guys on this video, it's really going to take a long time. So we'll take a look at Microsoft, which is the actual underlying stock here. As you guys can see, Microsoft is the only tech company so far that's sitting at all-time highs. So pretty impressive. For anybody that holds MSFT, you're in the money, man. You're making banks. So, and you're also getting passive income from the MSFO ETF. So we got DSO here. DSO is really ripping to the moon pretty hard right now. As you can see, it's really taking off to the upside. So we'll draw on support and resistance here. You guys can basically see that it has held above both of these support levels. So resistance did actually turn into support at roughly around 20.60 a share. So we're currently up roughly, it looks like about 10% on DSO. Yeah, roughly about 10%. So that's good. NVDY, this is another one that we were talking about a long time ago. We thought that it was going to end up dumping at the time that we were basically saying we were bullish on Tesla, but bearish on NVIDIA. It's not that we were bearish on NVIDIA. We just we thought that it was a little overbought. So, and it did end up coming down, as you guys can see, in September, and pretty much the whole market did at that point. But as of we'll just call it right here, up at resistance to where it currently sits, we're currently down 13% on NVIDIA, so that is at a discount. We'll go over to Enfly here. You guys can basically see the support and resistance zones here. So you got your resistance up there at the top, and all we really have to work with in terms of support is this basically green candle wick down here. So from the top to the current price, we're only down roughly about 10%, so that's not bad on Enfly. Again, it did pop up massively because of earnings, so that makes perfect sense. Zomo, as you guys can see, this thing has kind of been getting killed a little bit, so it's not really looking so good for Zomo here, but I have told you guys before that I thought that oil prices were going to come down. Reason being, in order for inflation to come down, oil has to come down. So, I mean, it's not something that anybody really wants to hear, but oil is priced into the energy segment of the inflation readings. So the higher that oil goes, the higher inflation could be, and vice versa. So basically from, we'll say, these body candles right here down to the basically where the candle sits now in current time, you're down about 12.5%. JPMO, which is another one. Of course, the banking sector is getting hit because interest rates are high where the Fed's concerned. You have basically about 7.22% down, so not bad. It's still sit at $19, even though the high was at 20.50. I suspect when the Fed is cutting rates, after the yield curve uninversion takes place and potentially the market dumps 30, 40, 50% like it usually does historically. After that, we should see banks rally pretty heavily, and then, of course, the price of JPMO would also go up. Squee, not really much to say here. I mean, from the bottom to the top, you're sitting up about 32%, so that's pretty substantial. And looks like there is one more that actually currently pays a dividend that we can look at, and that is AMDY. This is a semiconductor company. So pretty much from, we'll say, from this low right here to where it currently sits, you're looking at roughly about 7.6% up. And from the top to the bottom, the absolute top to where it currently is, I should say, is roughly about 3.5%. So that's not bad. So I think the two that we could probably look at here in terms of actual returns since inception, or since the low, I should say, is squeeze. So we'll take a look from the bottom to the top on squeeze. You have about a 32% return, so that's substantial. MSFO was another one. So pretty much from the low to, I gotta zoom out here because I can't actually, for some reason, this thing has issues when I go too high with it. So you get about a 12% return on MSFO. And the other big one was Coney. So from the absolute low, and again, this thing is causing problems. So one more time, from the absolute low to where it currently sits, Coney's up about 26, almost 27%. So which one would I say is the best in terms of price returns year to date, or basically since inception? I would say in terms of price returns, Squee definitely takes the cake so far. In terms of maximum upside potential, we have seen it move up 32%. It's actually currently outperforming Coney. But in terms of the amount of time that the YieldMax ETF has existed, Coney takes the cake. It does not have the biggest percentage gains, but it has been around longer than Squee. So, anyways, this is our video on which YieldMax ETFs is the best in terms of price appreciation. Hope you all enjoyed the content. Please let us know your comments down below, what you think about these different ETFs, what you like, what you don't like, what you're bullish on, what you're bearish on, what you held or are buying, what you're selling, so on and so on. And we'll do our best to answer your questions if you have any. So please like, comment, and subscribe, and we will see y'all later. Peace.